Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert the Herd and Lanny Legend here on the Dividend Investing Network here, guys. Your favorite dividend investors. 2025 is all about capitalizing and keeping things simple here when dividend stock opportunities are out there. Well, I've got three dividend kings that I am watching. I might be looking and I might be liking, guys. So let's
Smash
tune
that.
in.
Oh, sorry. Let's smash that subscribe button. Give this video a thumbs up. Help your boys keep growing the channel here. I jumped the gun a little bit there, Lanny. I was so excited to ask people to subscribe.
Hey,
I cut
as
you off.
long as long as we don't have an offsides penalty that Cleveland Browns are always used to.
Yeah, this flag's getting tossed up here. I dig it. I'm also trying. I moved to a different spot in my basement, everybody. You actually get some texture behind me instead of the blank gray wall. So let me know what you think. I can move my table here if you guys are digging the new background, or if you don't really care, just let me know too. I'm always curious what you think.
Love it, guys. We're on the journey to now 30,000 subscribers, guys. A little over 20,000. So thanks for rocking with us, guys. But all right, 2025, guys, we're heading into our second week here. I know you guys are checking this out on Sunday. We're filming this here on Saturday. And stock prices are as of the end of January 3rd of 2025, guys. These are three stocks that could be stocks to buy right now. Three stocks that are yielding well over their 5-year dividend yield average. And as I said in the beginning, these are three dividend kings. And to be a dividend king, you've had to increase that dividend for 50 plus years consecutively without missing a beat. And Bert, question is how many of these three stocks we're about to dive into are in your portfolio?
One. No. Two. We get the big two. What about you, Lanny?
I get the three count, guys. One,
Oh,
two, three,
oh,
WWE style,
oh.
guys. So I've got all three stocks. And if you guys recall from my 2025 investing goal strategy video, I want to add to current positions. So this would be stocks to buy and possibly for me to add to my current stock positions here. So, Bert, we've finished up a few days here in 2025. We're going to put them through the stock screener, the PE ratio, the payout ratio, the dividend growth, guys. We'll look at the dividend yield. But this time we're going to also talk into and breeze it in a little bit of balance sheet work, looking at the current ratio, quick ratio, and then what's the direction of the share count? Is management going through the share buyback route? So that's what we want to check out.
Yeah, because share buybacks could also be a sign of undervaluation because management's not going to rebuy their shares when they are overpriced and misuse company capital. They're going to say, hey, the best use of our cash right now is buying back our cheap stock. So that's why it's always really good to keep an eye on what is happening with shares outstanding.
Absolutely. So let's dive into that first stock. Bert, this is a stock that I know you own a couple hundred shares of, guys. This is the good old, formerly possibly good old reliable Johnson & Johnson JNJ. Yes, back on this video. They're trading at still $146.24. They are down 10% since this time last year. That PE ratio is still looking very, very nice at below 15 times current earnings. And Bert, what's about that dividend payout ratio, the
Well,
safety of that dividend?
that payout ratio is also looking nice, Lanny. It's 49.8%. So it's looking so we for Johnson and Johnson, baby. What about that growth?
Growth, guys, they've been doing it for 61 years consecutively, raising that passive income stream to the shareholders. They've been doing it at an average rate of 5.54%, so pretty steady, pretty consistent. And again, with a 50% payout ratio, they should still have plenty of room to continue to grow the dividend.
Yeah, and with that stock price dropping, that yield is soaring. That yield is 3.39% for Johnson & Johnson, which is well above its 2.81% 5-year average dividend yield. That is fantastic.
Exactly. So you get a margin on that 5-year yield average. Market cap, again, if you remember the video of my 5 largest companies I own, Johnson & Johnson was also in that list because they have 347 billion in market cap. Now, from their balance sheet standpoint, they're pretty liquid. They have a current ratio over 1x. Their quick ratio is not too shabby at 0.79. That's when you strip out the inventory, from the current assets to see if they're still liquid, if they can't turn the inventory. So it's still not too bad. And that share count is actually trending downward, which means management or the company is buying back shares at the recent stock prices.
All right. So that's Johnson & Johnson, everybody. Dividend stock number one. sorry, not dividend stock, dividend king number one. Let's talk about dividend king number two here, Lanny.
Who does number two work for?
They work for us because we own them. We own them. All right, number two. Who
What's
do we
number two,
own?
bro?
Pepsi, ticker symbol P E P. Yes, the beverage and
Wow.
snack giant that has just been walloped in the last year. They're down 12%. Lanny, it was crazy to me. I grabbed a share of Pepsi this week because seeing Pepsi when I bought it in the low 150s was nuts. But seeing Pepsi close below 150 is even wilder right now. It's crazy. Their market cap's still above 200 billion, but it keeps dropping as that stock price keeps tumbling.
Yeah, hovering over that 205 billion market cap mark, guys. Pepsi is down by 12.73% since this time last year. Obviously, a lot of concerns with, RK Jr., working on the health standpoint and possibly Pepsi having to strip out all of their cheap additives to, produce their products. So a lot of concerns with Pepsi. They are a dividend king. They've been through a lot of crap, throughout their lifetime. They're a long-term company. But now with the stock price down 13%, that price to earnings ratio is sitting solid at about 18 times earnings when they're historically usually between 21 to 25x.
That's key. They're never going to be the cheapest stock in the world. They're never going to have a below 10 PE ratio, but 18 is very cheap when you look at Pepsi's historical price to earnings
Absolutely.
ratio. That's fantastic.
Absolutely.
Their annual dividend is $5.42. Their payout ratio is 66.5%. It's beautiful. Beautiful.
6.5, again, not the lowest PE ratio right now. So don't expect dividend growth to be that 7 to 10% like it has been. Again, dividend growth, they've been doing it for 53 years at a 7% rate. I'm thinking more in that 4.5, 5 to 6% range right now.
Yes, I agree. I know I was joking when I said that payout ratio is beautiful. It is higher than our threshold. And I agree, Lanny. The dividend growth is going to stall a little bit here, but their king, as you said, they've been through it. Stall
Yeah.
is not cut.
We've owned stocks where they've gone through the lulls, but then come back.
Yeah,
Procter and Gamble is a very great
100%.
example.
Exactly. And that's why you look at kings like this that know how to manage their balance sheet, manage their earnings, manage cash flow through different economic cycles. That's what you get with a company like Pepsi that you don't necessarily get with an inexperienced company that's never really been through a downturn before.
Exactly, guys. Now, the yield's at 3.62%, so that's why it's really nice to see them below 150 because the yield now is over 3.6%, which is very favorable against their 2.8% 5-year average. So you're getting more income right now for your dollars investing with Pepsi stock. Not concerned by any dividend cut right now. Not concerned about even a stall in the dividend. What
Yeah.
about that balance sheet, those ratios, that current ratio and quick ratio, Bert?
All right. We usually like to see the current ratio around 1. It's at 0.89x, so it's a little bit below. When you strip out the
Yeah.
inventory, you look at the quick ratio, it's 0.7x. So both of them are below 1, not the most favorable trends for us. Overall, that share count is decreasing. So like Johnson & Johnson, shares are going down for Pepsi.
Yeah, share count's going down. Why is that nice? Because management might think of it as, oh, I can get a return on my dollars better than actually investing in our own business. Or two, it might be a way to also arbitrarily boost earnings per share by reducing the share count. So there's a lot of reasons why you like to see a downward share count. And the quick ratio didn't shock down. Think about this. With Johnson & Johnson, it shocked down 24 basis points. With Pepsi, it went from 89 to 70 from the current to quick ratio. So not as much of a shock downward.
Yeah, they're not quite as inventory intensive as Johnson & Johnson and some of the
Yeah.
next companies, which is good. I
Which
guess
is way not expected from a pharmaceutical to a snack and beverage company. You know what I mean?
So again, manage their balance sheet. Like, they might not be perfect, but they have a good grip on their inventory. They have a good grip on this part of the process, which will help them prosper when things like through the bad times and the good.
Like Pepsi at the current prices, like JNJ at the
Yeah.
current prices. So those are two great dividend kings, guys. But we said there were three kings on this, right, Bert?
Not one, not two,
Not two.
three. Who are we talking about, Lanny? Who is that third dividend king?
Guys, this is about dividend kings here, and this is about a stock that not many people do talk about. We're going to talk about a Hormel, ticker symbol HRL. Yes, the pepperoni and, again, snack company here, guys, with
Yeah.
Hormel. Who has never had Hormel pepperoni? Throw that in the comments right now below.
Can't say us, Lanny. That's what we had on New Year's. We made little stromboli bites and we put in the Hormel pepperonis in them.
Did you really? You gave some props to
Fantastic.
Hormel?
Yeah, some props to Hormel. Got to tip the cap.
Being a shareholder, I appreciate that revenue.
Yeah. Hopefully it makes its way through that divvy because that's what it's all about here. That's what we are all about here. So make sure you subscribe if you want to hear more updates about these dividend stocks.
So guys, trading at 31.36 at the close. Their PE ratio currently is about 19 times earnings. So again, not the cheapest, not the most expensive though right now.
No, their payout ratio, when you consider their $1.16 dividend, their payout ratio is 70%, so even higher than Pepsi, which is fascinating here for Hormel.
Yeah, that's the one piece that I'm not liking about Hormel. Now, again, they've been increasing dividends for 58 years, average rate at about 6.14%. And, again, with a 70% payout ratio, you might get somewhere between 2 to 4% dividend growth is my expectations right now for Hormel.
Yep, I would agree with that. Their yield, now that they are down, they've only been down 3%. They've been in this high yield pattern for a while now. Their dividend yield is 3.7%, well above that 5-year average yield of 2.65%.
Exactly, guys. So you're getting a 1.05% margin to their historical yield, which is, fantastic. Beats the other two Pepsi stock, Johnson & Johnson stock, guys. If you actually take a look at the market cap, they are just 10% even of Pepsi. They're at 17 billion market cap. So smaller company, large, but not like, we're not talking mega large as a J&J or Pepsi. But Bert, what about their balance sheet?
All right, their current ratio is 2.32. Back out all those pepperonis that are sitting in a warehouse, the quick ratio drops down to 1.19x. So that's the big delta we were talking about there. You see a lot of inventory for Hormel. Both of them are above 1, though, and that's what we like to see.
Yeah, really solid. Again, yes, there's a lot of inventory, but even stripping it out, their quick ratio is actually bigger than Pepsi stock and Johnson & Johnson stock's current ratio.
Wild. So everybody, those are the 3 dividend kings here that Lanny's looking and he's loving. Johnson & Johnson, ticker symbol J&J. Pepsi, ticker symbol PEP. Hormel, ticker symbol HRL.
Yep, guys. So, there we have it. Currently am liking the price of J&J and Pepsi. Hormel, because of the payout ratio is a little high, I'd want them to come down in price. So maybe that $30 kind of floor is where I would be looking at. But let us know what you guys think of these 3 dividend stocks. Are these stocks to buy right now? Are you cautious and concerned about the food industry with the the headlines that are hitting the news right now? Let us know in the comments below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us. Jack.
Guys, that's Bert the Herd and Lanny from the Dividend Diplomats, over and out.